Welcome back, everyone. We are here with the London session on TopstepTV. If you're here for the first time, my name is Marcus Dee. I've been trading for 18 years, specializing in some of the more unusual products that we don't see very well represented anywhere else. Wow, what a night! What a night. So we have the tariffs, they are out of the way. So where were you when the Liberation Day was happening? All right, let's go over some stuff that you need to be aware of for today, because we are probably in for a wild ride. Now, I do have a very tiny natural gas trade. It was probably the only thing that was not going nuts last night. I did make a long copper trade in my personal account because we obviously can't trade after hours on Topstep. And yeah, that one lasted the whole like few minutes and actually went to 164 ticks. So I was not in with massive size. It was only a 3 lot. So that was a very, very nice end to my day last night. So yeah, today I didn't feel the need to have any coffee. I think we had, enough excitement. So I said to Paul H, I'm living on the edge with my peppermint tea. But here's the thing, guys, and girls. We need to make sure that if everything starts going crazy again, that we don't break the rules on trading within the 2% of the price limit down. Or price limit up. That can happen too. However, I'm going to give you some links here to make sure that you don't get caught up, because that is one of the rules that comes in during extreme volatility. So here is one of the links. Now, I believe that's the video where Mick, Danny, Hogue, and Jack are talking about how to stay within that limit and to make sure that you don't lose your accounts because you're trading within the 2% of the limit down. Why do these exist? Well, it's one of those things where when we get such liquidation moves, and if you... Let me just go over to my sim account so that we can see what happened in NQ and some of the equities. So look at this move. This is just absolute insanity. And when these sort of moves start going really insane, what happens is that there's not enough buyers to actually pick up the price. I mean, who's going to buy this when we are dropping like 1,000 points, right? So the exchanges have introduced some cautionary measures to ensure people kind of don't get stuck in positions, I suppose. But during the limit down, the trading is halted, right? But there is still an auction. Now, the video that I've just posted in the links, they will explain it much better. I think Mick explains it really, really nicely. So do have a look at that. Educate yourself. Don't go, wondering what happened if we get another crazy day. So make sure that you're following the rules, right? Okay, so do I need to put any more links? Let me see. If you want to read through this as well, is this the same link? There is a very good CME website, CME page, where you can familiarize yourself exactly what the price limits do, what they are, and all of that good stuff. Someone's saying, can we trade on a combine? Yes, combines are not subject to this. This is only for funded accounts. So if you have an XFA or a live funded account and you're trading typically on a product that has this enormous move, that will be applicable to XFAs and lives. But on a combine, if you want to blow up your combine, that's up to you. Just know that even if you're on a combine, if the exchange halts all trading, you will still be stuck in a position. You won't be able to exit because, they're not they're not opening it for trading. And quite frequently, after the price limit down, they tend to open up the prices at a completely random point. So we've seen this during COVID. It was crazy. Like, it would just go limit down, like literally within almost seconds, and then the exchange would halt trading. But then they would reopen it. It would be like hundreds of points away from where it was, because they tried to still figure out where the new price should be, and then usually during the trading halt they expand these price limits. So even though they might expand them, what was happening during COVID is that as soon as we would be opening, they would be going limit down. Like, so it was just like insane. We had crude oil that went negative, and we had crude oil that got suspended during those times, the good old days, right? Super slippage, yeah. FX Trader says, have you ever traded without stops? No, never. So, okay, I say never. My very first step into the trading world was from a complete layman's point of view. I put in like 500 into a brokerage account, and I put all of it on Intel. But I didn't know what I was doing then. It was, completely, novice Dee, the noob, stepping into the markets. However, as soon as I started learning, and I was very fortunate to have a friend who was a trader, so he kind of put me on the right path, and he immediately talked to me about stops, he immediately talked to me about positioning, he immediately talked to me about risk reward and trade location and all of that good stuff. And, as soon as I got onto the more systematic side of things, where I was really planning things out from the very beginning, I think that's where I was maybe at a more advantageous position than most. So no, I do not trade without stops. I think that is a complete insanity. Why would you trade without stops? You're not an investor. You are not a position trader. The only time you can trade without stops is if you have a platform that is calculating risk based on the assumption that the price will go to zero. Like something like eToro, a whole bunch of other platforms that have more kind of stocks oriented business model. But for the intraday side, where you have leverage products, where you have the ability to control your position size and to calculate it with your stop loss in mind, why would you have it any other way? So, there's a place for investing in things. If you're going to keep them for years, then, using stops might not be the best choice. And then if you don't want to use stops, you always have options. You don't have to trade outright futures. If you do a long option, there's no stops there. You have a strike price and you have a premium. But, that's the advantage of options, where it's a different product. And if you can't figure out stops, perhaps you're not at the point where you have the edge using stops. But, if you are here, if you're with Topstep, I would hope that you want to work on that. There are ways to place your stops at an appropriate area. You can use things like dividing ADR over a certain number of days by a certain number of, expectancy over your risk reward, right? So if you want to get, let's say, 3R in a day, if 1R is your stop loss and you want to get 3R, well, you would probably need to divide that whole thing by about 5 or even 6 in order to have enough space for your trade to work out. Now, I'm talking from a point of view of somebody who likes to catch big trends for the day. I do turn into a bit more of a scalper if the day calls for it, if we're like in a range-bound day. But for the most part, my core strategy is banking on a higher risk-reward and catching that piece of the trend for the day. Now, you also have other ways of catching things, like, for example, using a TR over a certain number of candles, and then, using that as your stop loss. But, make sure that you have some sort of a volatility adjusted way to have a look at what your stop loss size should be. I am absolutely dumbfounded, flabbergasted when people just go, oh, just use a 20 point stop. And then we go from having, I don't know, 300 points to having over 1,000 points in a day. And when I asked the question, well, have you changed your stop loss? They're like, no. Like, you haven't changed your stop? Well, it's not the same market state, right? And then those same individuals typically go, I am really struggling. Yeah, I'm not surprised because you're using a stop loss that is not appropriate for this particular market. So let's put that into practical terms. If you're going to trade 6A, which is the Aussie dollar, typically, it doesn't move that much. It's a very slow moving product. Trades maybe 30, 40 ticks in a day. And you compare it to, something like Nasdaq, which has 1,500 ticks in a day. So using, a 20 tick stop in Aussie, it encompasses like half of the entire day. But in Nasdaq, that's like not even the tiniest fraction of the range that you're expecting. So, am I surprised when people get whipped out on such tiny stops? No, we have to absolutely match the volatility of the product to the stop loss sizing. All right. Bowser said, what about catching falling knives? I would advise against that because, again, if it's a limit down day, you're going to be in a lot of trouble. Most of you have probably not been trading for long enough to get through some of these events. And, I've been around for nearly 2 decades doing this day in, day out. So you go through different market states. You go through periods of sometimes years of low volatility. You go through periods where generalized trading strategies that people have used for many decades start breaking down, like the carry trade. That pretty much disappeared during the quantitative easing. Everything went to like 0% interest rate or negative in some cases like Switzerland and Bank of Japan, and that caused a complete dry up of momentum across like vast number of asset classes. So even ES and NQ were very quiet. Like we used to have 74 points. Get this, 74 points was the range of NQ when I started going into prop. 74 points, that's it. Compared to now, right? Now we have about 300. So it's an entirely different market state. Now let's have a look what's going on. Andrew says, morning Dee, you mentioned the other day about your stop settings. Could you give a guidance on how you calculate your stops? I want to set up something I've just talked about it. So there are many ways to do it. I'm not going to say that my way is the best way, but I find that my way works pretty well. So I typically take the average session range and then I divide it by a certain number that will allow me to run the trades that suit my style. Now, if you're more a scalper, that's probably not going to work for you because you're going to have different objectives, and those kind of stops will probably be too big for the smaller chunks that you're trading. So I can't, unless you want me to teach you my Market Stalkers method, I don't feel comfortable telling people, oh, hey, this is how I do it. Purely because I know that many of you, looking at the VIP stats, many of you are more scalpery, right? So it's a completely different style. If you want to change that, yes, we can talk about it. I know that somebody like Paul H, you have a style that is closer to mine. So, that would make sense as a discussion. But to just come out and say, yeah, this is how you should be doing your stops. This is a type of the industry where you can, peel an onion 1,000 different ways, right? Let's leave cats out of it. So yeah, there's ways to calculate stops, but as long as you have some sort of a systematic, methodical way to account for the changes in volatility, that would be appropriate, So like I said, we have Coach Paul, maybe use a 5-minute chart and then use 2 ATRs on a lower time frame as your stop. That would be a good way. You have my way of taking the average session range over a number of days for that same time frame, and then calculating that by dividing that into, something. So yeah, just you have to figure out what speaks to you and what you connect with, rather than just taking one person's advice and just going, yeah, I'm just going with that. Eric says, when volatility gets this crazy, which is uncommon, should we stand aside until normal price moves or returns? Until normal price moves return, or should we engage? I would highly suggest that if you've never seen this type of volatility and you didn't trade before, if you haven't been trading for about 5-6 years, I would probably just stand back and wait. Maybe try it on a practice account to if you do get smacked in the face, you don't want to do it on anything that matters, on any accounts that matter. Or pick products that are not crazy. Like right now, I'm looking at natural gas because that seems more sensible to me. Whenever I've spent the morning just going through a number of charts. Like copper looks absolutely insane. I might find a trade there. Right now we're in a mean reversion, but by the time that I looked at it, the size of the candles have gone to like 26 points, and that means I would have to use like over a 50 tick stop, and I don't want to do that. Like it means I would have to size down even more, and it's just too much risk at this point. So I just want to see what happens in the products that have reacted heavily. But in the meantime, I'm using something that still is moving, and I'm expecting some maybe increased movements, because usually natural gas is pretty dead for this time of the day. But I'm looking at it now. It actually already has a pretty decent range. So I have some calls right up here at the swing extreme at 420. That would be like my really aggressive target. But if you look at the market structure, we have, some kind of a trend in place, trend upside. And yes, we've come off here, but then we decided to settle somewhere around 394, 395, created a new demand. And ever since, we're sort of trying to create structure to the upside. And I like that, right? I like the way this chart looks. It looks pretty sane. And I feel like when I look at the average session ranges, nothing's changed. So I can still use my normal stops and, see if I can get a couple of trades out of it today. But for the rest of it, I'm going to wait until later in the day to figure out what I want to do. Because as it stands right now, DAX is insane. DAX is like 350 ticks already. We're not even like halfway into it. Now, here's the thing about those of you who use my sort of average daily ranges and average session ranges. This will be more geared towards my market stalkers. Those of you who know the market stalkers method. Expect that the statistics on the products that have reacted strongly to tariffs are completely going to be useless today. Maybe you can use them as like a back test. So if we overshoot average session range and we come back to it, maybe look for a directional move, but don't look at them. This is an outlier day where the averages will not be very useful. Here is where context is king. Instead of going, oh yeah, we've hit ASR high, let me fade this. Just say, all right, we've hit ASR high, can we smash through it? So just change that a little bit today, and then maybe look at the strength of the auction, look at whether there's single prints, look at the size of the candles. Are they massive? Are they, vastly different than what they were pre-tariff? But yeah, it looks like we're going to be having some interesting times ahead. It can be terrifying, but it's also opportunity, right? So volatility can be sweet when you kind of adjust and know how to approach it, I suppose. Okay, when Bowser says, when do you think they will drop the margin requirements? I don't know. We kind of expected that the margins are going to be kicked up a day before, right? Because they were like, there's a big event. And the message that, like the email that I got from my broker didn't even come in until like literally an hour or two before the actual event. So I don't know. I think they probably want to see what happens today. I haven't received anything about margins going back to normal yet, so I'm guessing the margins are going to stay until they figure out what this is doing for the markets and if it's increasing volatility quite quite a lot. If it's still causing liquidation moves across the board, obviously the margins are going to stay much, much higher than they usually are. Faithful Trader says, how do you buy on strength? It's difficult for me. I like seeing retracement. I've been watching copper form 488.40, anticipated a run up, but didn't trade. That's actually a good decision, Faithful Trader, because I think that the range is expanded a little bit too far out of my own comfort zone. But here is one way that I like to go in on trending moves, because back in the day, I also struggle with that. You can see the marker for my lovely trade that lasted not very long, but it hit nearly 5 hours. It was like, it's insane. Like ADR high actually reacted as a reversal point. I had the 514 in my line of sight for calls that were around there. Is it a surprise that that's exactly where they came from? Probably not. But have a look at the profile that I have on my chart here. There's a single print here outside of the initial balance. The red box is the initial balance. Whenever we extend that, we can look to the strength of the auction to see whether, it is a strong auction, whether we're still inside some kind of a structure. And if not, if you get a very, very strong push, technically in some situations that could be a sign for you to go in on a trending move. It's trying to keep your stops somewhere inside the initial balance. Now in this case we actually have overnight VWAP that also could be used to protect stops. So if you were looking at this and if it was not like 26 points per candle, maybe one approach would be to basically just look at what's going on this time frame. So let's just mark this candle, then drop down to a lower time frame, and then see whether there's a pullback on a lower time frame. Something that I like to do would be to perhaps look for the pullback on a lower time frame to match the ATR of that candle. In this case, that was 7. So anything that retraces at 7, that will be your point of entry. So in this case, that was already here. So basically, you just wait for a little bit of a pullback if you are sure that it is what you're seeing, and then you go in. Now, this can happen intra-candle as well. So for example, I know that this one, so if you see the composition of this candle after the extension, that one was waking up and down. It didn't just go straight up, so you can just wait until the pullback is 7. So that one wouldn't have been it. I don't know whether this one would. It's not very clear from here, but here's one that actually had a 8 points of pullback. So once this one opened, started wagging around, maybe at around 5-6 points, you can already say, right, I'm going to try this. And then I would put in my full disaster stop, which usually on copper is about 35 ticks, which on most days will be enough. Now today, it's not going to be enough, and I'm probably going to go, if I do trade copper, I'm probably going to go to like 55 tick stops. That's about 27 points. So yeah, and that means smaller size automatically. So I can't, whenever you're increasing stops, you have to lower your size as well. Otherwise, the math ain't mathing, right? But yeah, we're getting a bit of a pullback in copper now. So, that could be an opportunity. 11 points. For me, it's a little bit too far from the rest of the rest of the thing. So something that I would look at if there is a pullback at all, which makes it a little bit easier, is to maybe pull back to the single prints. So again, I have to reference this chart because I can't, I'm not going to be able to create TPOs in due time on our Topstep. So basically look at any sort of a single print as a potential area for any kind of a bounce. So if we ever get down there, or you create more single prints to the upside, each of those gaps, each of those little caves that we create directionally can be used to get a bit of a retrace. Now, obviously, the single print fade is also a thing, so you can find yourself in a trade that just kind of keeps bleeding, which is why I prefer to have my stops that will look just visually something like that. Okay, to encompass the entirety of the single print that you're planning. Now let's imagine that this goes even higher, creates another single print. You will have, so in 16 seconds we're going to find out whether that's going to happen. So you can effectively do the same thing. So you have a single print and then you go like this. Why? Because they can chew up all the single prints and then reverse. That can happen too. All right, so now we have the D period printing, but for now that's still comprised in the previous candle. So let's see what they do here. Here we go. Okay, some more single prints created. So this would be another thing, right? So you have single prints and you assume that the single print is going to be like that. In fact, let's do a trade based on that on my combine as well. You know what? It's too much work. I would need to like set. I just realized it reset the layout, so let's not do that. But basically, let's go back to a copper chart for a second. But yeah, this would be your entry. You're assuming now that this single print is going to stay. Obviously, if it doesn't stay, it doesn't stay. It's not a directional move. No big deal. That's why you control your size. But right now we have one set of single prints. Do we have a second set of single prints? Possibly. So what do we need to see now? Well, we need to see a new higher high, right? Now for this, you can look at lower time frame structures as well if you're not sure what's going on. And then you can drop down to a 2-minute chart and go, are we still creating higher lows? Well, it's a little bit tricky here because we actually created a lower low. But we really need this to push higher. If it doesn't push higher, the more time this is spent not pushing higher, the less likely it is that it is a true directional move. So looking at lower time frame structures, I look at something called Q points, which is kind of like a modification, simplification of fibs. You know, fibs have very complicated what do you call it, the numbers. It's like 67.2, 78, and I'm like, it's just the top and bottom quartile. Like, what is wrong with people? You know, markets are not that exact. And yes, they're very useful, but to me, just looking at the top and bottom quartile of the given swing would be enough. You can do that on any time frame, but you know, learning to look at those market structures on a very small time frame. This is a bit difficult now because it's just gone into a straight up directional move, and this is the only structure that we have. So this is why, to me, the single print is one way to limit risk, and then to just look for a continuation of this. So what do I need to see here? I need to see that the higher high at 94.25 actually keeps going higher. I also don't want to see any wicks to the downside. I do not want to see any indecision. I want them to have smooth movement, and obviously this low that we created at 493.60 becomes my new orientation point, because that is where the lower low was made. So that lower low needs to stay, and that if it's broken, that means they are either not deciding to go higher or we're pausing. You know, it's a bit of a speed bump. Either way, the timing of your trade is not appropriate yet. Okay, so I combine those two things, and might be a little bit overboard for some people, you know, to look at ATR of the candle and then wait for a retracement and then drop down to a lower time frame or make it. But it's all very basic, right? It's not rocket science. It's like, oh yeah, I'm just looking at what the overall size of the candle is over X number of days, and then if I'm looking for a pullback, or if I'm looking for an entry into anything, the better way to do it is to wait until the ATR of the candle is sort of exhausted against your trade idea, and then go in at that point, because it has a much higher chance of actually bouncing from that point. So therefore your timing is massively improved. All right, let's go back to the questions. So hopefully that helps. A couple of techniques how you can try and tackle those pesky directional moves, but they're not easy. To this day, even I still find them very difficult. I prefer like an initial balance break if I'm going to do that, and on most days you won't have single prints. That is the biggest problem. So if you're not in around that kind of initial balance edge where market makers typically tend to engage, it gets very tricky, and you cut yourself up trying to get in on a move that you're seeing very clearly, but it's like, I don't want to use a 100-tick stop. Like, come on. So yeah, it is tricky. It's not easy. So, living through a whole bunch of them, directional days with single prints, without single prints, it will enable you to develop enough experience to figure out what type of a day it is. This is one of the reasons why I like Market Profile, because it unequivocally tells you whether it's a strong move or whether it's a bit of a lackluster auction, right? You can see that in volume as well. But I use it with profile first. Some people would argue that volume and the size of the candle have a very high correlation pattern. And actually, back in the day, like, we didn't have volume. Like, it was a CQG. It's like, well, volume, what is that? You just had, like, at one point you didn't even have charts. Like, if you wanted a charting package, that cost you a pretty penny. So you would get your account, and all it had was just like a quote board and a dome. That was it. That's how it used to be. And not too long ago, this wasn't like a million years ago. Well, depends on your age, but this was like 2012, 2013, 2014. It wasn't that long ago. And then the speed of execution, you guys are complaining about the speed of Topstep. Let me just tell you that back in the day, you would click to enter a trade, and there would be a lag of about like 5 to 7 seconds before you knew whether you were in or not, right? It was the old internet connections. We didn't have broadband. We didn't have, lightning speed, everything. And then to pipe volume through that was like, wow, very difficult. Some people had broadband, obviously, but I think we had more, like, the connections were just not what they were. That you were lucky if you got like a okay connection. Video streaming, that was not a thing back then. That only really got kicked up. Like, the technology was there, but until we had COVID and everybody was stuck indoors, they didn't even put the bit rates through at like proper HD. Because everything crashed. I don't know whether you guys remember, but remember when Netflix crashed? Like, everybody was sitting at home, everybody was watching Netflix, everybody was like streaming, multiple devices in the house if you've got a family and stuff. And it crashed, and it crashed the whole thing. And then they decided they needed to upgrade some of the the masts and stuff, so that everybody could actually and get the connections through properly. We had in the UK, we've had many households that are using this like old copper connection, and they bring the fiber optics to your home, but they don't actually change the box inside. And many people, I actually have a friend who's a systems engineer, and she actually told me about this, because when I was getting fiber optics in this place, she said, just be careful that they change the box inside. And I was like, what do you mean? And she said, well, it's the old BT connection, which is like British Telecom, is that it? And they have the old copper connection, so, fiber optics doesn't work on that properly. Like, it's just going to give you the same, maybe a little bit more improved, but the speed is not going to be nowhere near fiber optics, because it's still going through the old stuff. Anyways, I digress. Long story short, during COVID, we kicked up all of the technology so that everybody can have like HD streaming and Zoom calls and blah, 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 all of that. And obviously that's kind of carried over into the speed of executions on these platforms that we're seeing. But back in the day, that was just like utopian dream, right? To actually have a platform that will, enter you into a trade at a click of a button with no lag. So, I just find it a little bit funny when people are complaining. And I'm just like, yeah, no idea, Granny D reporting for duty. Paul H says, my view of stops for what it's worth is much wider stops, much smaller size, and don't move your stop. Hallelujah. All praise St. Paul. Paul is right. I am of the same opinion. Smaller size, catching bigger portions of the move at the appropriate trade locations. Of course, you have to work, a little bit harder. I think that most why am I talking so fast? I haven't even had coffee. Like, what the hell? Let me just go into a bit of a zen and slow down. Have a bit more peppermint tea. Maybe that'll help. For some reason, my brain is like, I woke up with my brain working like 1,000,000 miles a second, and that sort of comes out on some days. I used to have many more of these days when I was younger, but must admit they're getting less and less frequent. Senior moments for the win. So the stops and the whole scalping thing, when I see people who are trading for like a few months and they're like, oh, I'm a scalper. And I'm like, are you then? Okay. And then I see what they do, because, we have the whole VIP thing. I can see everybody's stats. And I just go, you have no idea what you're doing. It's like, I'm a scalper, but there's, negative risk reward with like 40% accuracy. And I'm like, you're just asking for a blow up, aren't you? So the problem with scalping is that you have to have the higher accuracy, over sort of 65-70% at all times, in order to make that work long term. Time is the only judgment of your approach. There's no others. Doesn't matter how big your risk reward is. If you're, maybe you have a 100-to-1 risk reward, but you only win once in 1,000 trades because that is an outlier day. So you will only probably be hitting those targets during a black swan event that comes every 4 or 5 years these days, right? If we look at historical evidence. But when you're a scalper, you effectively aim for the high accuracy and quite frequently negative risk reward. Whether slightly negative or overwhelmingly negative will also impact the amount of accuracy you must maintain at all times. The more negative the risk reward, the higher the accuracy needs to be. But here's the thing. Everybody has malfunctioning periods of time. You won't always be smashing it at over 80%. You're going to have a day when you suck and your accuracy is 20%. So what does that 20% day do when you smush all of the samples together from different days and like hundreds of trades? Does that even out to be about 45% rather than 65, 70? And if the answer to that question is yes, you have no business scalping on a negative risk reward. It means that you don't have an edge over time. Okay? There's no excuse for that. So what you're doing, you're wondering why it's not working. And then you have 1 day or 2 days or even a week where you're like smashing it. And you're like, I am the wizard. Everybody's going to bow down in my excellence. And then the next day, you blow up an account. Why? Because you have too much variability in what you're doing. So if you're a scalper, the variability also has to be reasonable. So if one day you're doing, 20 round turns, and then the next day you're doing 3 round turns because you got scared of yesterday, you're not a scalper. You're just an emotional trader who has no idea what they're doing. Like, I'm sorry to break it to you and to be like completely blunt, but you can't, trading, you have to be honest with yourself, okay? The amount of delusion in this industry is epic. I will always say that I'm not the best trader in the world, but I can tell you what my strengths are. However, I can also pinpoint my big weaknesses, right? So I can tell you that I'm excellent at finding trade locations that go for, at least 150, 200 ticks. I am also very excellent at holding trades with no fear. Now that comes from experience, that comes from, 18 years of doing this. And it doesn't matter what's going on. If I'm in a drawdown or if I'm smashing it, I will still know what a great setup looks like. Okay? I will still know that. Now, whether the market maybe dries up and the conditions are not giving me those extended moves, that's another issue altogether. But here's also my weakness. My strongest point is holding trades, but that's also my weakness, my biggest weakness, right? Because I tend to hold trades for too long, because I'm always looking for that minimum 2-hour risk reward. And then when that doesn't happen, especially nowadays when I'm a bit older and, I have a chronic illness that causes brain fog and, weird, weird things that happen and a lot of pain and stuff. But basically it kind of throws me off, and then I'm like, should I take this off? No, I'm not sure. Let's just give it a bit more time. Then I come back and it's kind of, I could have had 1 hour, but should I? I'm always looking at it from a larger time frame perspective, statistics over long periods of time. And I'm like, well, what does 1 hour do for me right now? Like, not much. It's just going to screw up my risk reward overall. Yeah, let's just leave it. But if it's a range bound day, those are the times when I'm actually able to profit. But it took me about 9 years to get good at range trading. It was a huge weakness of mine. I did not like the whole nitpicking over ranges, and it's like, where do we snipe it and how do we snipe it? But then I started noticing this thing called the liquidity grabs, right? The smashes through the highs and lows on a range bound day and reversals. But then I also kept those trades too long until I realized that my MFE, again, this is where data comes into consideration, away from all of our rose-colored glasses or doom-colored glasses that we like to trade from. I realized that my MFE on range-bound days was 1 hour, like literally like the middle of the ranges. So that told me, so I went back through those trades to see what they looked like on the chart, and I was like, what am I doing? Like, I'm aiming for 2 hour, but here I had a perfectly good sort of POC, developing POC as a target that kept getting hit. So I was like, why don't I just modify my profits on range-bound days to only be 1 hour and see what happens? And lo and behold, Dee became all right at holding, at managing range-bound days. But it took me a long time. All of us who have been doing this for a while, we've gone through beautiful moments and absolutely terrifying moments where you think, I'm losing my house. Like, this is it. I messed it up so badly. Is my husband going to kick me out? In fact, that was one of the days when I had one of the bigger losses, and I didn't want to come home. And he's like, where are you? What's going on? And I said, I had a really bad day. So I will understand if you don't want me to come back. And he actually said, it wasn't that bad. It was a big loss. But, in my eyes, it was, I was like, my God, he's not going to want to talk to me anymore. And then he said to me, and this is why I love him to bits. He said, oh, come on, it's just money. Just come home. Sounds like you can't afford a hotel anyways. I was like, oh, I love you, So, we've been through amazing ups and terrifying downs. And that's just the trader journey. But whatever happens, I just love this job. I have so much passion for playing detective all day, and it's not like I don't even care how much money you make or not make. I know people get their heads all, oh wow, this person made that much, and wow, this person made that much. But at this point, I have most things that I want to have in life. I lead a very, very small life because of my health condition now. And even when I didn't have the health condition, when I was younger, I was a musician. I traveled the world. I've got nothing that I want anymore. Like, I have my 8 dogs. I always wanted to be covered in dogs. I have that. We're just moving to a country house, always wanted to have fields everywhere and, clean, fresh air, be away from everybody. We're going to get that in like a week or two. We're there, right? And it's just, I don't know, for me, it's more fun to, it's always like a bigger flex that I can find these like bigger trades than, oh, go in on a massive size and grab 3 ticks for a hilarious amount of money, right? To me, that's not skillful. And I'm always like, yeah, okay, that's emotions, right? And you can see it in their eyes. Like, I'm talking about YouTube influencers in particular. Most people that I see, they're trading from an emotional standpoint. It's not really anything systematic. There are a few that do trade very systematically, so full respect to them. But the vast majority that I see, it's all just emotions. And, you know, there's no systematic process. There is a plan, but that plan is quite wishy-washy. And even they're not certain of the plan, which is kind of the point of the plan, right? So the plan shouldn't be in the beginning, oh, this is definitely going to work. The plan is just a way to track your progression, to see what's working, what's not working, and then you kind of keep chopping and changing until you get to a point where you're pretty confident in your setups, and your whole risk model as a whole is stable over time. So that's what really interests me these days, right? I'm not interested in somebody coming to me and going, I passed the combine in 2 days. You know what I say to that. We had that Batman meme, which I'm not going to bring out. But yeah, I'm with Paul on this one, right? Wider stops, bigger moves, smaller size, stability over profits, okay? Justina says, I see opportunity from the volatility. Is this the wrong mindset? If I don't have a clear idea of how to approach it. So it depends on the level of volatility. COVID was bonkers, but at the same time, I noticed after about a couple of weeks that the ranges are expanded, but everything else was the same. As in, like, the moves were still happening at the same time. There was no change in, you know, how the value areas were bouncing. You know, all of the setups looked the same, but with an expanded range. So I just adapted to that, and it was great. You know, it was my best year ever. It was crazy. You know, I couldn't even believe it. I was like, really? Like the moves that I thought were, you know, the targets that I thought were pretty aggressive were getting reached in like 30 seconds or less. I've honestly never seen anything like that. We've been through I started trading a year before the credit crunch happened. And then, you know, I was a swing trader, so maybe not that in tune with the intraday side of things. And then in 2012, I started looking at intraday a lot more. But by then we had another problem. We had European austerity measures and everybody bringing their interest rates down to near zero, which again affected the momentum. And then, you know, I found crude oil, I found gold, and we were very happy for many years. And then last year happened when crude oil just kind of decided to go through menopause and dry up. And we're pretty much still in that market state, save for like a couple of outlier days, like we've seen yesterday. Crude oil reacted quite a lot to that. So maybe we get a bit more of a volatile day that will shock horror surpass the $2 mark for the second day in a row. Because what we have one day where it goes 300 ticks like it used to. And last night I was actually talking to Hoop for a second, Coach Hoop, because we talk quite a lot. We talk like at least a couple of times a week, maybe even more often sometimes. Some weeks we talk nearly every day. So we were both trading crude oil back in the day. And, you know, last year, and if you don't know, there was a thing called Topstep Squawk Radio back in the day, which we were both a part of. Like I was not like, it wasn't like a regular segment. I was just a funded trader there, but I was popping in pretty frequently to talk, which is where my relationship with Eddie and Hogue and Hoop came from. You know, it was a thing that we did back then. Now we're doing TopstepTV, right? But I know Hoop from back then. So when we started TopstepTV last year, I kept complaining, right? I was like, crude oil, like, what's happening? And even Hoop was like, Dee, where did they all go? And I was like, I don't know. I don't know. Bring them back. But they're still not back. So here we are year on. And, crude oil for the most part is not on my list of tradable instruments for that reason, because it's just so slow. And then every so often we have one piece of news or, tariffs, and then it goes nuts, right? So, I don't know. It's one of those experience things where you've seen enough market states to approach volatility with caution. Let's just put it that way. Because of the possibility of limit up, limit down, getting stuck in positions. Sometimes the moves that you see are also very illiquid. So they cause these like volatility vacuums where you just go from one area to the next without anything in between. Almost like an intraday gap. We've seen that happen too. So what's going to happen with your stops if there's nobody to take it in this liquidity gap? It's just going to get skipped over. Because remember that stop losses are guaranteed to fill, but the price isn't guaranteed. Okay, very important point where you need to know the mechanics of futures and how the clearinghouses work. And this is why it's good that a lot of us have Series 3, because they kind of teach you about that. And when the let's say that if you have a limit order is guaranteed price, but the fill isn't guaranteed. So if they can't give you the price, they won't fill you. So, it's risk on both sides, right? So you can be in a position where your limit order got reached, but, or your price, the price didn't quite get to the best price available for that time, and therefore your limit order is never filled, so you're still in. Or you can have the liquidity gap where something just jumps over your stop and fills you at a completely random price. Okay, and you could also have the point where you get stuck in a limit down and you can't get out of a position. Do you think your stops are going to work during limit down when trading is halted? No. So please be careful. Whether you're in a combine, yes, you can trade to within 2%, but do we advise that? Well, if you want to see what it looks like getting stuck during a limit down, if we get that kind of a day, go for it. Go for it. See how horrendous that is, losing a combine over price hold. Obviously, any sort of volatility can bring these sort of conditions and market states. So I would say just be on the risk. Be the risk manager. Don't be a degen trader, right? Oh, I have to trade. You don't have to trade, okay? Yes, volatility is opportunity, absolutely. But the way I'm looking at this, I want to see whether this is sustained. Like whether this volatility is here to stay. We know that we've had expanded volatility in general. VIX is, higher than it was a year ago. We have a lot of metals that are... copper is sold off. Okay. Let's see what that does to the chart. And where it is. So VWAP at initial bounce high, first point of interest on copper. Yeah. Oh, I don't know. This looks a bit wicky to me. So yeah, here's how I'm approaching this. I want to see whether the crazy moves are gonna hold into next week. And that's going to give me a better idea of whether this is here to stay, whether tariffs are going to cause madness similar to COVID, because we haven't seen that kind of volatility since COVID, like I would be very honest. It did remind me of the liquidation moves that we've seen when the whole thing started coming out about lockdowns and COVID and epidemic and blah, blah, blah. So it looked a lot like that, So I want to see whether we carry over. So probably I'm going to take it super small, super tiny into NFP and into Monday next week. If we have a couple of days of limit down, I'm going to be like, okay, caution advised. If not, it means that this is just a momentary shakeout and basically just an overreaction to tariffs. Now, if you want to see what the tariffs are, I'm sure they will show this on the main broadcast as well, but let's try and... just can't believe they call it Liberation Day. Let's try and save this. And then I'm gonna drag it over as an image because Robert sent me that. So they're both me and Dakota because we run the overnight segments, so they needed to know that we need to tell people about the 2% limit down rule. All right, so here are the tariffs, right? So China has been hit with 67%. Vietnam, 90%. Ouch. It's like, what the hell? Like, is this what they're charging us or you guys? Because, yeah. And then you say reciprocal tariffs. They are pretty much, I mean, are they actually lining up with does Vietnam charge 90%? I didn't know this. Wow. Okay. So yeah, they have it higher because obviously they're like, yeah, we're going to hit you back with this. Where's UK? Okay, 10%. That's fair. All right. Madagascar, 47%. Wow. But you know, I don't know. I kind of see his point. Like we have this thing called the VAT here. I mean, it's only... I can kind of see both sides of the story, okay? I'm going to play Switzerland here. Stay neutral. I can see why he's done this, because I've never realized that certain countries charge, you know, ridiculous rates. Like, what is this? Like, really? If somebody told me, you know, this is what they charge, I would be like, yeah, you're lying. But yeah. So, kind of see his point. You know, I'm going to play the devil's advocate. Kind of see his point. And what do you guys think, and girls? What do you think about tariffs? Is it fair? I'm really interested to know. What are our thoughts on that? Because having seen that, because I haven't really delved deep into it. Here's the thing: I'm a technician, right? And I know what's going on macro, but it's not going to be my primary. Like, I'm not going to choose a level because, oh yeah, Trump said Madagascar is going to have 47% tariffs. But yeah, what are your thoughts? Yeah, Anne-Marie. Oh, Anne-Marie, hello. Yeah, she says, me too, Dee, understanding a whole lot more about tariffs in the last month. Yeah, so from that point of view, you know, the current president, he doesn't look that out of order to me now, because seeing that, I'm like, oh, I see. Okay. Gear says, Gear is someone I know pretty well. We've had a lot of interactions. One of my market stalkers, I believe. I'm not sure. Tariffs says, I find it dishonest from most politicians outside of USA to only bash Trump without a word how high their own tariffs are. Yeah, so this is kind of my point, right? So it's like, guys, like Vietnam, 90% on like really? 90%? David Castillo, it's the tariffs, reciprocal tariffs compared to like what the other countries are charging and what the USA will be charging. This is why Trump is introducing tariffs. Like, you know, I know that as a technician, I live under a rock sometimes, but dude. So this is what the tariffs are charged to the USA, right? So this is what the countries charge USA. And this is what the USA will now be charging them. That's why they're called reciprocal tariffs. I didn't know much about this. Like, I'm with Anne-Marie. I'm like starting to understand a little bit more like what's going on here, which is why I find it funny that a lot of people are criticizing politicians, and we can criticize them, but you know, they got there, however they got to that position, they probably have a lot more expertise and knowledge than you and I, right? So whenever people are bashing politicians, I'm always like a diplomat, because I, you know, And trust me, we have our share of silly politicians over on this side of the world. Like, where do we effing start, right? UK MPs and stuff. It's like, God, really? And some of them come from very privileged backgrounds, you know. So we had our own Sunak, right, when he declared that the biggest, you know, hardship for him was like not having Sky TV. It's like, that was your biggest regret, dude. Like, some people couldn't buy bread to eat, and you're like, oh, we didn't have Sky TV. It's like, oh, poor you. I really feel like, really. And when he was growing up, the Sky TV was probably not that. Anyways, I'm not gonna go down that rabbit hole. So yeah, we have our share of Muppet politicians, trust me. But I'm always I'm not going to bash their knowledge about the economy and, you know, how they're approaching it, because they're going to know more than me. Are they a bit Muppety sometimes? Absolutely. But yeah, I'm not an expert in this sort of stuff. This is like, you know, way over my pay grade here. But I am starting to understand why he was so hell-bent on introducing reciprocal tariffs, seeing it laid out so like unfairly, I suppose. Here's my Serbia. We got hit as well. God. It does explain, though. Here's my thing, because I grew up in Serbia. And during the times of sanctions, we didn't have foreign goods at all. And then just sort of around the time when I was moving out of there, we started getting a lot of foreign goods back in as imports, because you couldn't import anything before then. And I always wondered why those sorts of products are incredibly overpriced, like incredibly. So much so that something like L'Oreal makeup, for example, something is like very, very common piece of something that you would use every day, but it's foreign, right? It's USA. It was considered a luxury item because of this tariff that we have 74% on USA imports. Like, it's crazy, absolutely crazy. So I kind of get it. I get it now. Yeah. Anne Marie says a lot of movement down is hedge funds de-risking as tails become more likely. Yeah, so she also says we need to step back with a cooler head and just watch the shakeout. That's kind of how I'm gonna approach this. If I do trade, I'm gonna trade something that wasn't affected by tariffs. You know, like natural gas. That's why I'm in on it. Anything else that was heavily reactive, I'm gonna stay well away from that until I know what is it that we're looking at here as the new world order almost. Fudge says, my question is though, where did this data come from? What does currency manipulation and trade barriers mean? Well, currency manipulation is usually due to central banks messing around with the amount of units available and in circulation. So that's usually what it's not like currency manipulation in a way that like, oh, Goldman is looking for my sim stops. They don't care about us, right? Even if you trade with 100 lots, they likely won't care, unless you're trading something that's very illiquid or, you know, doesn't have, let's say, a thin market. Like copper is not super thick, so if you plop in 100 lots in there, yeah, you would probably be a little bit more visible, but it's still not going to be like, you know, Fed's knocking on your door. So currency manipulation usually pertains to central banks manipulating things with cash flow and with the amount of units available and all of that. And then currency manipulation, some people say that it's also the interest rate stuff. So whenever they're changing interest rate up or down, really what they're doing is adjusting the cash flow to the country. Now, the amount of people who are not understanding that is what they're doing is kind of staggering to me. So I'm just going to move on from that topic. And trade barriers, well, again, I'm not going to be playing an expert here, but trade barriers, you know, if you are basically charging really high tariffs, that kind of increases the cost to the end consumer, and I would guess also lowers the profit margin or to the producer and the exporter, right? Like in the most basic terms. So that would create a trade barrier, right? It would create a trade war potentially. That's how I'm understanding it. Maybe I'm wrong. I don't know. I don't know everything. Edward says, I don't use fixed stops, but I put the stop where the trade idea has failed and adjust size depending on how it impacts RR if it leaves it valid. Yeah, so invalidation points are a real thing. Yeah, I have invalidation points inside my bigger stops because I use 35 ticks. Again, I have the scalability to the volatility of the product. But yeah, I kind of do a similar thing where the invalidation point, right? Are we going to break through the low? Are we, going to break into a new market structure, or are we going to go back to the initial balance? So that will change how I'm looking at things. Okay, so natural gas has started moving. I'm on a 4-hour chart. So here's the thing. If you want to keep trades longer, go to the higher time frame. This is a question that I actually get pretty frequently. How do I stay in longer? And I think yesterday I kind of tackled it, but then I went down the intraday side of things. The easiest way to stay in on a trade is to get off the 30-second chart. Hey, even get off like a 15-minute chart and a 5-minute chart. So whenever I'm in on a 4-hour chart, it allows me to effectively base my decisions on the price action that we're getting every 4 hours, right? And even if we get to the end of the day, I've been in a trade for 4 to 5 hours, and if there was a trending move, I generally am able to capture it pretty well. So there's, again, multiple ways to do this. I do this when I'm busy. Like right now, I am packing boxes, and I'm excited about the move. I'm very excited. I love the house that we bought. It's a real gem. Like, we were so lucky to get it. It's a very unusual property. You don't see those kind of properties anywhere. It's single story, but it's very modern, and it's sort of shaped in kind of a U shape, but like actually I can show you. And I think James, the producer, was kicking around the idea that we should do Topstep cribs. So I don't know if you guys would want to see that. So this is my new house. This is what we bought. So very, very unusual. Not like a UK home at all. I've got a field out the back. I've got a field out the front. It's lovely. So let me see if I can maybe show you inside as well. So that's the kitchen area. Huge, like, what do you call these? Like doors that you can just open and make an inside-outside space, which is very important in the UK, because some days you have like overcast, but you still want to make use of the outside. So you need to have this. And look, farm, like literally a farm right out the door. We are going to have to put some more secure fences, so there is work to be done there. But yeah, that's where I'm moving in a week or two. So yeah. And so maybe we'll do a little sort of Topstep cribs moment. I'll ask them, because obviously James was telling me that last night, because I was showing him the house, and he said, "Oh my God, we should do, like, you up for doing Topstep cribs?" And I'm like, I don't know, maybe. So I have to hide the husband, though. He doesn't, like, my husband is a very private man. Like, he doesn't want his face out there. We can have his legs in there, but he's like, I don't want to be on camera. So yeah, I'm going to make sure that I hide him away, show off all the doggos and stuff. Paul H says, past another 50k combine going long ZN 15 minutes into Globex Open. Excellent. And notice that he said 15 minutes into Globex Open rather than at Globex Open. Well done, Paul. That's very good. Amazing. I mean, you've been smashing it. I know that you had a bit of a rough patch at one point, but clearly the rough patch is over. And you've grown so much. You're obviously not, I would consider you an intermediate to advanced trader at this point, Paul, because you take in everything that we talk about and you put things into perspective, and then you take action on it. You're like, do I like this? Let me try it. Oh, that actually is pretty good. I'll keep that. And then you systematize the setup. You go, I took the setup from this. It was a Coach J VWAP trade, or it was a, D exhaustion trade, or there was this trade, that trade. It's always explained very well. Like every time you tell me what sort of a setup you did, it's never like when you were on, obviously, when we were talking, and I asked you, oh, what were you doing here? You explained the level, time of day that it was, the stop that you use, your intention. We talked with Jerome about intention, right? That's what it's all about. When you set that intention, you get much better results. And I'm also going to quote somebody from my VIP group who said something very, very interesting, that I think pertains to people who rush things, because they were rushing as well, and then had a big epiphany. So I have that tattoo on my arm that says haste makes waste. So it's kind of on the same thing, but it was a different way to explain it. So they said like this. This was them talking to another VIP member, right? So it says, just take it slow. I have a non-VIP XFA that can contribute to this VIP. Once you slow down, I don't know how he means that, because if there's another XFA that's non-VIP, that doesn't go to my stats. So thanks, mate. Okay. So he says, once you slow down, it gets faster. I know it sounds odd, but I have also been told that slow is smooth and smooth is fast. That is an army saying. So, I think that's a great way to explain it. That slow is fast. Once you slow down, it gets faster. It makes no sense, does it? And yet it rings true for trading. You slow everything down, you go down to micros, and you're like, wow, I'm actually making headway. Like I'm actually making profits here, and they're mounting up day after day after day. Whereas when you're like full porting it, rushing, over trading, doing a million trades a day, you find that you're like, in fact, look at Shoulder Tap, right? Whenever Mick is pulling up the big people who trade with bigger position sizes. Thank you, Dee. Got there in the end, Christ. Okay, so whenever he's talking about people who trade with size, what is the average P&L that we see? What is the average P&L that we see? We see 245 average P&L, maybe 117. Every so often you get like 450. Now, I trade with small size, but my average P&L, even with all of my tiny little trading and stuff, is still maintained at about 400 average per day. I've been trading micros forever. It's like, it's just over time, things tend to smooth out a lot, and you really see what you're doing. So to me, going in with massive amount of size and only averaging, $200 a day, there are less dramatic ways to achieve that sort of average P&L, and I don't know how you can not have emotional traumas from being up 60 grand and, being down 10 grand, and then going back up to 30 grand and then blowing it all up 90 grand because you overtraded. I don't know. To me, it's just mind blowing, right? Lenny Bradford says, yep, Navy SEALs say that, don't know the origin. Yeah. So I thought it was a great thing. I'm planning to actually make that into a little, sign on my wall. I think it's a very, very good thing. Let's go back to Bruno here. Okay, because he's throwing me questions. So if I miss somebody's question, Emery says, remember to hit the like button for Deeyana. Thank you, Emery, for reminding me. I'm terrible with audience interaction as always. But yeah, if you like what I'm yapping on about here, if you're finding value, caress the like button, right? It doesn't cost anything, right? So if you're finding value, I'm not asking you for, donation to my favorite charity. Just asking you to make one click on the like button. That's all. Can I look at ES? Not on my live. I don't pay for equities on my live, so I'm going to skip over that. But I mean, I can look at it on the other charts, suppose. ES, equities, anything equities related, I want to see where this ends up. I'm literally not even going to touch my DAX today because of that. Where's my ES chart? Okay, I seem to have lost my ES chart. That's great. Yeah, this Thursday is just going really well. I do have a lot of chaotic stuff happening right now because of the move. You know, I'm literally packing my life away slowly. Let's get this one. All right, let's have a look at ES. What is happening? Daily charts. That's a move. I mean, look at that. It's just like complete liquidation, right? Making a new lower low just from like the very basic side of things. Now, do I even have anything? So this particular contract doesn't have the history. So I want to actually drag out the continuous contract, which I'm not sure we even have on Topstep, but I do have it on here. Let's have a look at what that tells us, because I want to look at it from a historical point of view. These sort of analyses are actually useful during these times when we're kind of smashing through everything. And sometimes the monthly charts can actually provide you some clues as to where the hell we went to, right? Okay, it's loaded up. So look. So this is now a monthly chart of ES. What the hell is going on here? I have some random fibs and everything. Let me just get rid of all of that. There we go. What does this do for the monthly chart? For me, this is still a healthy pullback, interestingly. I remember back in the day, I had this timer when we were still doing Squawk Radio, and I was doing a visit there, so we were showing my charts, and Hogue goes 27. I had like thousands and thousands on the countdown, and he's like, that's an interesting number. Sorry, it just popped into my head. Yeah, so what does this look like to you guys and girls on the big chart? It looks like we have finally had the healthy pullback after all of this for months and months and months. So to me, this is still an opportunity to maybe fish for longs somewhere closer to, 53.50, maybe even deeper into this area. So let's say 5,000s are possible from this thing, because this is not healthy. Like all of this, like what are we doing? To me, this was a very tricky thing. I mean, I had smashing trades on DAX, but like 70% of them were to the long side. And that's like, I almost never do that. I always try and get, long, short, long, short. DAX was just like long, 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 pullback, long. Then it just got boring. I want to play detective. I want to be like, what are we doing today? Not just like mindless caveman, wake up, long. That's no fun. That's where, people lose the zest for this. I want the market that challenges me. I want a market that is two-sided. I want every day to be different. This is why I do this. But yeah, from the monthly perspective, to me, this is still not a complete disaster, So maybe if we remove our blinkers and just go, well, what is actually happening here? Let me have a look at the volume profile from such a large standpoint as well. Just need to change a few things here. Let's have a look at 1, 2, 3, 4. Okay. Months. So I'm using, I'm going to be doing sort of 7 months worth, and that doesn't even cover the low. So let me increase that. Let's go to quarters maybe. So maybe go to last 3 quarters maybe. Okay, so 3, then quarters. So I have all of that in here, right? So I'm just gonna have profile. Okay, so there it is, a little bit better, right? What happened? We spent some time in the area around 5,700. So we know that from the options as well, that number was supportive for a very, very long time and resistant as well. So it worked on as a line in the sand. Now we broke through that. Where are we coming into? We're coming into a lower volume area with one little sort of ledge looking formation around 54, 20, 29, let's say, 28. Doesn't have to be that exact because it's like a massive time frame. But this whole area now is a lower volume area. I would expect it to reach at least to this demand. Been talking to too many USA people. But yeah, on a massive time frame, this does not look like a disaster, does it? Like, to me, this just looks like nice pullback, right? Nice. Weekly chart. Again, weekly charts. From this point of view, we barely went under the previous 3-week low. Is this low volume area going to cause us a reversal today? Is this all just one big shakeout until we turn around and just get right back where we came from? This is what I want to see, right? So until I know that, are we going to break this demand? Are we in a true bear trend, or is this just this one big reversal and we all just had these blinkers on from intraday and we're thinking, whoa, everybody got liquidated? I don't think so. I think this is actually a normal move that we haven't seen like forever. So yeah, it's definitely worth sitting on the sidelines for a bit just to let everybody digest this and see whether the high volatility is still there or not. You know, that's what I'm going to be looking for. So there you go. Pi. We went over, yes. Hopefully that helps. Dallas says, good morning, Dee. On copper's dome, is it repair above where there are gaps in the volume profile? So anytime you have a very strong move that just kind of swooshes, like it doesn't matter whether it's up or down, but if it just blows everything out and creates single prints, that at some point needs to be repaired. Like statistically, we see that anytime we've gone into single prints, that creates structure that will be in need of repair. It's almost like, oh, we left things undone over there, so we need to go back to finish the novel sort of thing. This is where the mean reversions through the single prints can be very juicy, but they are not, like on larger time frames, it's not that common to see those fill immediately the next day, right? So you will typically have a day where we have multiple single prints, then the next day will be a little bit quieter, maybe the next day and the next day, and then at some point we see the single prints from the previous few days or the day, last week, they start getting chewed up and filled. So there is no real time frame to what they will do. Now, whether this copper move was just a repair of that, I still don't think so, because if you look on my charts, and I wasn't running profile as like this is where, for example, one of the rare occasions where a 24-hour profile might actually be useful. I don't like using them for like regular trading hours during regular times, but when you have an outlier move like this, it's very useful to see what's going on there. Is this repair? I would say no, because if it was true repair, we wouldn't have this whipsaw. So right now, I'm thinking there are some sellers, and let me just see where this thing happened. I think there may be some new sellers. I haven't looked at open interest. Might be worth looking at it. So I'm going to do like a deep dive as I get like a little bit more awake in the day. At this point, we could have like a very boring day on copper. If this was a true move to like repair the structure, I think that this single print here, because this was a single print, I think it wouldn't have caused the reversal. So for me, this does not look that great for mean reversion through the single prints in an effort to repair that structure. It doesn't look that way. Otherwise, we wouldn't have the single print fades that shoot everything up on the same day, right? This is where profile can help you. So if anything, I will probably be looking for shorts maybe. Again, I'm not going to be trading copper. If I do anything, it's probably going to be like on a combine. It's not going to be an account that matters to me. It's just going to be like testing things out and removing risk from, I made $6,000 last night on this pop. I don't need to trade for the rest of the week. I'm happy with that. Maybe plop in one micro if I see something super, super obvious. But this is, to me, I just want to, let's get to COMEX. Okay, let's get to COMEX. Let's see how the main session digests all of this and how these commodities that went absolutely bonkers are going to correlate now with equities, because we had some indications of the old risk on, risk off. So gold going up, equities going down. Is that going to carry into today? Nobody knows. So let's observe. Today is going to be observation mode for me, and tomorrow. Tomorrow's NFP. So a lot of information for the markets to go over and to, spend some time ruminating, to see where we are. This is one of the biggest adaptations that you can have as a trader, to step back and observe. Look, you don't have to be in a trade to make useful observations about the market state. And I think that is the prime problem with newer traders, where they just want to trade, but sometimes trading introduces emotions. Fear blocks brain development. So chew on that. Since we're talking about chewing. When you're in a constant state of fear, there are no neural networks getting created. Now, Jerome can maybe pitch in more with his side of things, because he's obviously a scientist. So maybe we could ask him about that next week as well. But from what I know about it, when you're in a constant state of anxiety or fear, the new neural connections and neuroplasticity is not nearly as elastic. So therefore, you're effectively doing yourself a disservice by going into accounts that cause you fear, pressure, emotions, and then you stay stuck. You stay stuck at the same level for a very long time. So you need to ask yourself, I can slow down and learn, or I can stay in this spin cycle of, trying to get funded, busting out, trying to get funded, bust out, trying to get funded. Set some more achievable goals and stay realistic in where your skills are. Just because you had 1 or 2 days of good trading, it does not mean that you're the king or the queen now, right? We need to prove competence over time. We need to prove confidence. Confidence as well, but confidence too. Christ. I don't really, I should have had a coffee. I just leave it at that. I find that I mangle my words in the morning a lot. And then I wake up and, I go on the main Topstep TV. It's like 2 different people. Sleepy D and Night Owl D. She's just waking up at 7 p.m. Eric says, do you trade long when the macro news environment is negative? Trump tariffs, equities seem to go up very irrationally. I'm not a core equities trader, man. I do trade DAX. And yes, I've traded long more often last year than all of the other years because of the trend that we were in. Didn't have anything else to trade. But do I use macro? I take the information in. Is it the main thing that I'm trading? No. The main thing that I trade is through technicals, right? Profile, distribution curves, exhaustion areas. whether we're smashing through some calls and puts, whether gamma exposure levels are causing an acceleration or deceleration, things like that. But do I look at macro? I always have financial juice open. But I'm not a long-term, in this situation, this is not a long-term investment kind of thing. So for example, I do have a portfolio, and over there I had some protective puts to make sure that if this happened, then I'm not completely underwater. But I've been so fortunate to have a lot of my investments where I effectively went in really early. So I had Palantir from like $9. It was like, I couldn't even, like, I thought they were pretty good at $50, but they just went up to, I think they went up to like 120 or something. So again, I was quite, lucky to have enough space, let's say that way. But even so, I wanted to have some options there to make sure I still profit from a potential smash down like we've just had. And unlike some other traders, I don't like sort of like covered calls and stuff. Like I don't feel comfortable when my risk is unlimited. I just have a thing about that. I can see that maybe in a range bound market, a more market neutral position would be better. So I have done that. But when we are in a clear trending market, I'm just like, I'm not sure I want to be doing this, right? So I don't know. It's just something that I have to think through myself. I'm not the biggest options trader. I don't trade them all the time. For options, you're probably better off going to Anne-Marie. I know Anne-Marie trades loads of them. I know enough, obviously. I know enough of them about them to use them for what I need. Let's just put it that way. But I wouldn't be using them as a vehicle where I'm always doing options. You're not going to see me in options very often. CJ says, good morning, Dee. Could you please explain the dynamic circuit breakers for gold? I've noticed that the price limit does not depend on percentage for gold. Am I right? Again, I'm not a super expert in that. So I'm going to refer to the CME thing. Let's see what they've got about on gold in particular. So let's have a look at the CME website. And let me try and figure out what it is that they're doing. Oh yeah, that's okay. So they have the dynamic circuit breaker. Where are we now? We're DC. What month are we in? Is it M? DCM, yeah. Okay. These products use dynamic circuit breakers. Limits update using a variant derived from the prior day's settlement. Okay. So that means they're basing the circuit breaker on settlement price from previous day, right? So it's not a percentage based, it's just like a dynamic thing that they will use to kick it off when they believe it's it's too much, right? A little bit trickier than equities, right? Let's find DCM. Is there a search box here? Like, what's wrong with them? Like, honestly, somebody needs to just take CME and like hire some people who know how to create better websites. Like, what the hell is going on here? Like, are you seriously going to make me read through all of this? There's no search. Like, you can see how CME is not really going with the times sometimes. Like, they're obviously a big authority, but like, why isn't there a search box? What is going on here? So it's like we have GCJ, so we're not in J. Where's GCM? This is platinum. Where is the current contract, CME? What gives? If anyone from CME is watching, sort this out, man. Like, what? What are we doing? Yeah, they literally don't have the current front month. So how are we supposed to know what the dynamic breaker is? Okay, here we go. So you expand it and then you go to read through it. Oh, excellent. Oh, we got there. Right, so dynamic circuit breaker variant is 3166. Now 31662, I would probably guess that was yesterday's settlement. It would make sense, right? That's what they say. So again, I'm not an expert at this. So, I can tell you the same that I've noticed myself. Yeah, so 3166 was exactly the settlement price from yesterday. So that's what they're basing it on. I don't know what the dynamic part is. So that's obviously something that is not... actually, there is an FAQ. So let's go here. DCBs. What are dynamic circuit breakers? Thank you. Significant price movements during the trading session. We know that already. And here's more vagueness. Lovely. DCBs define an upper and lower limit of how far an instrument is allowed to move in a configured time interval. Okay, so break that down for us. Same products using traditional circuit breakers which have a static daily fixed value pinned to settlement are implementing DCBs. Okay. The market data security definition message for these products will not publish the price limit values in tag 1149, high limit price, and tag 1148. Okay, so that's the code that they're running, so that will be the line that they will not be publishing the price limits there. Okay. Previous day settlement times DCB percentage value, which is still a big secret. So apparently DCBs are also percentage based, but it's maybe a variable thing. Is that what they're trying to say? I think that's what they're trying to say. So basically it's more dangerous, I would say, because we don't have a set limit down in percentages. It's just when they deem it's gone too crazy, they're going to basically implement a DCB for gold. I mean, to me, equities are, they're looking at the, actual percentages. This is like, well, when we decide. So yeah, be careful trading gold today, guys. Keep these limits in mind. This all seems a bit wishy-washy to me. All right, that's a combine. This is my life. All right. Yeah, I mean, this natural gas is pretty drama-free for now. Right, let's fire out some questions because we are at time. I want to cover everybody. Yeah, Anne-Marie was referring to the old internet speed. Then you do a double click and find out. Yes, I've done that before. The good old days, yeah. So what would happen because of that, the time that we were talking about the slow internet connections back in the day, you would enter a trade and it wouldn't fill you, and then you would enter it again thinking it didn't fill you the first time, and then they would fill both positions, and you're like, oh great, I'm in trouble. It was a lovely time. Yeah, very, very stress-free, yeah. She said sarcastically. Can someone tell me on Topstep where to add the orange, purple, and dark purple lines behind the candles like this? Orange, purple, and dark purple lines. What lines are we referring to? I don't know. Did I miss something? Joe, I'm not in a copper trade. I'm in a natural gas trade. Copper is not on my thing now. So what is the dark and purple? Like what? What, you mean just like lines? The EMAs? Is that what you're talking about? Yeah, it's the EMAs. Okay, I got it. Wow. Well done, Dee. The EMAs is just like, I've got 9 EMAs, anchors to low, close, and high. And then I just change the colors like this. So you go into the settings of the actual indicator. You click there. And then you pick whatever color you want. It's very customizable. I love it. I actually do love this part of Topstep. The fact that you can customize all of it so easily, any colors you want, down to the colors of the realized profit and loss. I was getting a little bit annoyed by the red because red to me means like blood. It means like bad associations. Let's not get into it right now. But it's literally like stress and trauma related due to the fact that, I grew up in Yugoslavia in the 90s. So because of that, it causes weird sensations in me and has a big negative connotation. So I decided to change that. And I don't even think about it. I'm just like completely focused on the process. So yeah, sometimes colors matter. All right, went through that one. Rex says, when do you feel a need to change up your strategy? How long do you give a strategy to work before moving on? So I have my strategies that have worked for me now for, in intraday, I would say 13 years. But in my swing trading, for the full 18, 19 years that I've been trading, right? I didn't really change my strategies. I have changed products. So when the strategy, and I don't just have one, right? I have a strategy for trending market, ranging market, but I don't have a strategy for a dead market. I'll be honest, right? When we get into a position where the crude oil did to me last year, excuse me, my voice is going. I'm just going to clear my throat. Yeah, so when I noticed that crude oil was going like 60 ticks in the space of 15 minutes and then nothing for the rest of the NYMEX session, that is the point where after about 6-7 months, so I give it a good amount of time, right? I'm like, let's see if this is a permanent thing. But after 6-7 months, and I did the same in Forex in 2012, same thing. In fact, I gave it a whole year in that case. After about 6-7 months, I'm like, this is odd. What is going on? However, I trade multiple products usually, right? So I won't just be stuck to one thing. If one product is drying up, I always have the others to fall back on. Like in my case with the London session, that's DAX. So whilst I was going through a big drawdown last year on crude oil, my DAX trading was still smashing it. It was like a decent year, right? If DAX starts to slow down, I will move on to something else. I might look at gold. I might look at, copper or platinum or RBOB. RBOB is like a crude oil twin that still has volatility. I was trading that last year. Same exact strategies that I used on crude oil. Nothing changed. Same time of day. Maybe wider stops because of the volatility, but everything else was the same. But when do you change your strategy? Well, if you only have one, if it's just like, let's say, a momentum strategy, and it stops working, I would probably say that that's more of an experience problem where you maybe haven't lived through enough different market states. And actually, I'm not a huge fan of the person who did the interview, but I'm a huge fan of the interviewee, which was Linda Rashke. So if you go to my Twitter and you click on the Twitter link below this video, I posted that interview. Linda was talking about the fact that we get more experience the more you can, the more years that you clock in this business. So if you've never seen quiet equity space, it would be mind-blowing for somebody who has only seen NASDAQ in the last 5 years for me to tell them that back in 2014, NASDAQ was only moving like 75 points in a day. And that ES was only moving about 6 to 7 points, maybe 12 points. Like there was a day when I was measuring the ADR, so I was going through all the spreadsheets and stuff. I kid you not, I came up with, and it wasn't even summertime, it was just like April, May, right? It's a complete time of the year when everything should be like, really, really kicking off. It was like 12 ticks. Like for weeks on end. And I'm like, what is going on? What is going on, right? It's just crazy. My Dynamite says, your chart has too many lines. Because I'm on the 4-hour chart, mate. If I go like this, not that many charts in it. the big ranges. But on the 4 hours, it all looks like smushed up. And that's okay. For you, this might be too many lines. For me, it's just the right amount of lines, and that's absolutely fine. We all trade in a different way. If you don't like the way I trade, you don't have to watch me, man. There's always that option, you know. How many trades do you think is too much intraday for scalping? Was it 190? Honestly, I think 3 is too much for people, especially if you've been trading. So here's a question: how long have you been trading, Chris? Justina says Linda is Bay. If she got on Dee's London comedy special, trading education, yeah, that's it'd be so happy. Do you know what? The day that I get to share the screen with Linda, I didn't even think I would ever get to share the screen with Anne Marie. To be honest, that was mind blowing to me because I've known about Anne Marie for 7 years. I've read her books, and you know, and now we're doing content together. It's like where am I right now? What's going on? What kind of beautiful Twilight Zone did I walk into? So yeah, Chris, let me know how long you've been trading for, and then I can tell you. Because if you've got, you know, years of experience, and I don't want to say to somebody who's got like 20 years of experience and has a proven edge as a scalper, you know, who am I to say anything? But yeah, maybe 6 months. Okay, so scalpers with 6 months, that's like a recipe for disaster. That means you just, that can't be a good approach, right? What you're doing is just trying to catch small momentums. Like if you look at Short Life Hacks whenever he's in here, he's actually a proper scalper with like 20, 30 years experience. He comes from the institutional background, and he says, yeah, I scalp, but I don't do it manually. I have an automated system that does it for me. And he actually said for scalping, to find your true edge, you need to have over 10,000 trades of sample size. Now, even if you're doing 190 trades a day, and and after 10,000 trades, you will know whether you have an edge. So let's see how many days that would take. So that would take 52 days of doing definitely 190 trades per day in order for you to figure out whether you have, like, that's like 3 months, right? So here's an idea. Run a combine run anything for 3 months on a very small size. Okay, run it on like a 1 micro for 3 months. Then see if you've got an edge. Because that would be the point, 52 days of you having 10,000. And that's like the bare minimum, right? 10,000 sample size over 3 months as a scalper. Did you survive? Are you in a drawdown? What's your percentage overall? Then you will know whether that's too much or not. And I'm guessing, just out of experience, just spitballing here, it's going to be too much and the whole system is not going to be stable. That's all I'm going to say, right? All right, guys, I'm starting to lose my throat. I'm going to leave some of these for next, maybe next week when we come back and have a better idea of what's going on. So before I completely lose my voice, I'm going to say thank you for hanging with me. I will see you a little bit later for the main broadcast because I do believe I'm on for one of the rotating segments, however we're calling them these days. But yeah, great questions. I mean, I didn't even get through all of them. Thank you so much. Hopefully you found this session useful. I'm Marcus Stalker D. I will see you again next week because I do not stream on Fridays. Thank you for hanging. Have a good rest of your day. Take care.